After manufacturing and services sector, the negative impact of China's zero-COVID policy is visible on China's overseas trade. The overseas trade has fallen steeper than expected as production of big brands like Apple, Tesla and others have fallen substantially amid the stringent COVID policy. The latest data shows November's exports of already stressed Chinese economy shrinking by 8.7%, which is 0.3% higher than the previous month. This is China's worst performance since February of 2020, the time when coronavirus brought the global trade to a standstill. Experts believe the figures would shrink more in the next fiscal quarter. The widespread COVID curbs have hurt importers too. Inbound shipments are also down sharply by 10.6% from a 0.7% drop in October. The downturn is the worst since May of 2020. Now, this resulted in a narrower trade surplus of $69.84 billion compared with an $85.15 billion surplus in October. The shipments have lost steam since August as surging inflation, sweeping interest rate increases across major economies, and the Ukraine crisis has also pushed the global economy to the brink of recession. Now, for more on this, we are being joined live by Andrew Freris, the CEO of Ecognosis Advisory from Vienna in Austria. Thank you for being with us, Andrew. Now, November's exports of the already stressed Chinese economy have shrunk by 8.7%. Now, this being China's worst performance since February of 2020, which was the time when coronavirus brought the global trade to a standstill. What effect is this having on the Chinese economy overall?
Well, let's first put this in perspective, because Chinese exports have been declining since about June. In other words, we're coming up for nearly half a year. So that doesn't come at all as a surprise. What I'm much more interested in is the very sharp decrease in imports. And imports, of course, is very indicative of the overall state of the economy, because you are importing not only to consume, but also to produce. And we must never forget that China is one of the major importers in the world. So in other words, the slowdown of the exports is much more reflective of the slowdown in imports rather than the exports themselves. Very convoluted and very sophisticated, if you want it, approach. That's why I'm not either surprised, nor I think this is really a newsworthy event. Also, of course, we must not forget that some of the major Chinese markets, particularly the European Union, is effectively in recession in terms of negative GDP growth rates. So, yes, this is hardly surprising. And as for the impact on the Chinese economy, that's another very important thing to note. I'm sorry, I'm taking a little bit of time on that. Net exports in China, net exports, exports my imports, over a historic period of more than 20 to 25 years, at best, really in very good times, for every 1% in GDP growth, they added to that about 10 basis points, 10% of the 1%. In other words, net exports in China are not, repeat, NOT, are not a major component of GDP growth. Domestic consumption and investment are much, much more important. So this is not good news. But I will hardly go straight away to my desk and lower down GDP growth in China because of the falling aspects of exports. So it is a complicated issue that has been almost grotesquely oversimplified by saying 8% decrease in Chinese exports. Really, nothing news in that.
Right. Andrew, what are the projections going forward? And could there be consequences on the demand for Chinese goods in the global market?
Well, there are combinations of two things. Don't forget, the longer China sort of spends time locked down, the worse it is for the overall production. And that, of course, is reflected very much on inputs, because Chinese companies that cannot produce, they import less. Okay. Now, the export part of that, of course, reflects the external demand, and that will be based on what happens in the United States, the European Union, and some of the major Asian economies. And the outlook for that is not particularly bright. So China, if it's going to, and I think it will recover in the next 1 year, it will be completely dependent on domestic factors. specifically retail sales and investment. And that is, of course, completely connected to COVID.
Right. Andrew, thank you very much for your valued insights there.
It's a pleasure.
WION, now available in your country. Download the app now. Get all the news on the move.